Very good evening to all of you. On behalf of Institute of Chartered Accountant of India, I welcome you all in today's 7th CP program organized by AASB of ICI this year. Within the last 15 days, AASB has organized 7 CP programs, and today, in the form of webinar, we are organizing this a very important webinar on SA 505 and SA 560. That is external confirmations and subsequent events. And in order to tackle these two standards, we are having two eminent speakers, CA Mukul Bindalji and CA Shubham Bindalji. So on behalf of AASB of ICI, I extend my warm welcome to both the speakers of today's webinar. We are also having with us four moderators, a very respected CA Ashwini Singhal from our own Chartered Accountant fraternity. Welcome to you, Ashwini ji. We are also having with us CA Lalit Agarwal ji, CA Naman Goyal ji, and CA Purv Gupta ji. I also welcome all the four moderators of today's webinar on behalf of AASB of ICI. So, Honorable Chairman and Vice Chairman, sir, both are stuck up in important meeting of ICI. So, I am taking this liberty to start today's webinar. And without wasting much time, I request the first moderator of today's webinar, very respected and senior chartered accountant, C. Ashwini Singhal ji, to please start the proceedings of today's webinar. Over to you, Ashwini ji, please.
Thank you, Anil ji. Fantastic. A strong pillar of our CA Institute, Anil ji.
Thank you, sir.
Very important webinar today, external confirmations and subsequent events, SA 505 and SA 560. Learned, both our guest speakers are learned and very young. Mukul Bindalji and Shubham Bindalji, both Bindals. Anil ji, whether it's a coincidence or both are relatives?
Sir, it is a coincidence, sir. Honorable Chairman, sir, has joined, sir.
Okay.
Good evening,
welcome,
friends. Good evening, friends. I'm Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board. This is the third year in which I've got the opportunity in succession to chair this very prestigious board. And this is the 7th program of the Auditing and Assurance Standard Board within a span of 20 days of the formation of the board. And we are doing more than maybe 40 programs on bank audit during March. So if any of the listeners or any of the moderators, speakers are experts in bank branch audits and wants to speak, please do let us know. We'll be happy to have some of you as a faculty, subject to the faculties already being finalized. So friends, today's topic is basically external confirmations and subsequent events. External confirmations play a very important role. This is a third-party confirmation. For example, a bank balance, which is confirmed by a bank, which gives you that added assurance to an auditor that the number stated in the financial statement is correct. And this is an area which is vulnerable to frauds. So we strongly suggest that you take confirmation directly from bank, not through any intermediary. And if you're posting balance confirmation, please ask your team to post on their own. Don't ask the client to post these letters. If you're still doing a physical letter, please post under your supervision and by your team. They should be posted, not at all by the client. And in case you're physically going to the bank and taking a confirmation, some of your team members should go and take it rather than the client taking it for you. This is extremely important to reduce the instances of frauds. This is just one example of the importance of external confirmation. And except for banks, I'll insist that there should be a confirmation 100%. But in case of receivables and payables, if you fail to get confirmations directly from the debtors or the creditors, you may check the subsequent clearances as well. As far as the subsequent events are concerned, these could be adjusting event or the non-adjusting events, and you have to see till the date the financial statements are approved by the board of directors. Say, for example, for 31st March 2024, if the board meeting is held on, say, 15th of July, and the accounts are approved by the board on 15th of July, then right from 1st April 2024 to 15th of July 2024, as an auditor, you should go through that what major events have taken place, which may have a bearing on your financial statement. Some of them could be adjusting event and some of them could be non-adjusting event. So with this theme, we are presenting you today's webinar, and I really thank two of my learned speakers, CA Mukul Bindal and CA Shubham Bindal. I don't know whether you are related party or not, but I welcome both of you. And I think this is a comment which our moderator Ashwini Singhal is also making. And we have four very esteemed moderators, CA Ashwini Singhal, CA Apoorv Gupta, CA Lalit Agrawal, and CA Naman Goel. I welcome all of you and really thank you for sparing your time. And my greetings to all the learned audience who are taking time and showing interest in the programs on the auditing and assurance standards. Thank you very much. And back to you, Ashwini ji.
Thank you, Chairman, sir. Now, I want to introduce our first guest speaker, Mr. Mukul Bindal. CA Mukul Bindal has 13 years experience in power sector particularly, and besides that, he has experience in oil and gas, financial services, manufacturing, retail, etc. Sir, he is employed with reputed international organization in auditing department. He also has a good experience as a guest speaker in various ICAI session events. Now I would like to invite our guest speaker, Mukul Bindal ji. Over to Mukul Bindal, sir.
Thank you, Sanjeev sir and Ashwini sir, for your kind remarks. Yes, what all you said about my experience, so that is something which I could get. Before I initiate my session for external confirmation on SA 505, I would request CA Shubham Bindal to tell about himself and to tell about his experience, and then post that maybe we can start the session.
Okay. So hi everyone. Shubham Bindal this side. I am currently working as an associate director with an organization, with an international organization, and have about a decade-long experience in both audit and accounting advisory. Primarily, I have also similar experience that Mukul mentioned. I also have experience in oil and gas, power, and I'm glad to be here today. Thank you so much to the entire CA fraternity for inviting me for this session, and looking forward to learning something today.
Fantastic.
Welcome all of you to this webinar, and I would like to thank you, CA Sanjeev Singhal ji and CA Vishal Doshi ji, for organizing this webinar. And this is the great opportunity for the whole fraternity to learn about auditing standard. Like today, we'll be discussing SA 505 and SA 560. So 505 is about the confirmation. So as an auditor, like we need to take a lot of confirmation, be it bank confirmations, debtor confirmations, and creditors confirmations, legal confirmations. So the standards emphasize the importance of the confirmation and the procedures that needs to be followed for confirmations. And if we don't receive the confirmation, what are the alternate procedures that we need to perform? And then SA 560 talks about the subsequent events, like the balance sheet date and the auditor's report, the period between those dates, like what are the events that have occurred and what are the audit procedures that as an auditor we need to perform, and what are the events that are relevant for our audit. So to throw the light on these standards, I would like to introduce again Mukul. Mukul is a chartered accountant and he's a BCom honors and have immense experience of 13 years in audit and having experience in oil and gas and financial services and manufacturing and retail. He is employed with a reputed international organization in auditing department. He also has a good experience as a guest speaker in various ICAI sessions. So without further ado, I would like to hand over to CA Mukul Bindal. CA Mukul, over to you. Thank you.
Thank you. Thank you. So I'll just share my screen for the presentation on SA 545. Just let me know once it is visible to everyone.
Yes, sir. Fine.
Okay. So thank you everyone. To start on external confirmation, which is standards on auditing 505. So this is the agenda which I'm going to cover today. Like what is external confirmation? Why do we need the external confirmation? What are the different types of confirmations do we have? Then what we should do if management refuses to allow us to send a confirmation request for our intended audit procedures. Then what are the procedures we do when we are sending the confirmations, right? Start from drafting the confirmation letter, and then what all things we should take care while sending that confirmation, and what we should do after obtaining the confirmation. Then how do we evaluate the confirmation response as an audit evidence? Then just to evaluate whether the confirmation response is reliable or not. Then what are the alternative procedures available with us we should perform if we are not able to get confirmation or the confirmation response is not appropriate? Then what are the different modes of confirmation which we can use? For example, confirmation by hand, electronic confirmation. Then as a part of electronic confirmation, how do we validate the email address? Then what are the documentation requirements which are required by the standard, as well as in practice which we follow for documentation of external confirmation. So to begin with, the first is external confirmation. So what do we understand by external confirmation, and why is it needed in the current audit environment? So I would say, as we all know, in the past, there have been very high number of high profile corporate financial failures. So because of all those failures, there has been an increased awareness of use of external confirmation as an audit evidence. And it has been mandated by some of the regulatory authorities around the world, which says that external confirmation is mandatory for an auditor to use for certain audit areas or captions. Now, what do we understand by external confirmation? So external confirmation means confirmation on certain things. It can be terms of the agreements, it can be the terms of the contracts or the entire contract. It can be the transactions between the entities, it can be the balance. So confirmation of anything from a third party would amount to a external confirmation. And why do we call it external confirmation? Because we are taking a confirmation for that particular piece of information from a third party, or we are obtaining it directly from the third party. So that is why we call it an external confirmation. So what are the common examples in practice where we use this external confirmation procedure? So external confirmation procedure are generally considered to be effective and efficient in following areas like bank balances, deposit balances, liabilities, investments, inventory, receivables, payables, contingent liabilities, guarantees, related party transactions. So confirmation can be effective in these areas, and these are the common areas which we generally use in practical scenarios for obtaining the confirmation. Now, moving to the next thing, which is what are the different types of confirmation requests we can ask. So there are two types of confirmation requests which we may ask. One is positive confirmation and second is negative confirmation. So what do we understand by positive confirmation? So positive confirmation is something where we ask for a response from the third party in all cases. So we draft our request, we include the information, or sometimes we do not include the information, and we are the third party to provide a response in all cases, whether he agrees with the confirmation request, whether he agrees with the information which is there in the confirmation, or whether he doesn't agree. So response in both cases So if you are sending such kind of a request, then it would be a positive confirmation request. And what is negative confirmation request? Where we are asking the third party to provide a response only when he doesn't agree with the information provided in the request. So which of the confirmation request is considered to be highly acceptable and highly reliable? So I would say it would be positive confirmation request. So in practical scenario, we generally send a confirmation request asking for a response in both cases, whether the third party agrees with that information or not, because it is considered to be highly reliable and it provides a persuasive audit evidence. So what can be the risk in this kind of a confirmation request which we may face? So there can be two kind of a risk. One, when we are sending a confirmation request with the information within that request, then party may respond to us without verifying whether the information within that request is correct or not. So to address this, we may send a blank confirmation request. For example, the way we do in case of bank confirmations, we send only the account number to the bank to provide a balance confirmation and the confirmation or information against other accounts which are being held with that bank. Now, there is an additional risk if we are sending a blank confirmation request. So there is a risk that party may not respond because there is an additional effort which is required at the end of third party. For addressing this risk, which we generally take a support from management. So management do a push to the third party and ask them to share the confirmation request response with the auditor. Then what are the scenarios where you would ask for a positive confirmation, and what are the scenarios you would generally ask for a negative confirmation? So positive confirmation becomes necessary when information available to corroborate management assertion is only available outside the party, outside the entity. For example, there is an inventory which is lying with third party. So in this case, you would definitely want to obtain a positive confirmation from the third party whether that inventory is lying with that third party or not. So in this case, you would definitely want to use positive confirmation. And second scenario can be if there are any fraud risk factors which you have identified and you feel that there is a risk of collusion at the part of management. So in this case, you may ask for a positive confirmation request. For example, that inventory balance is material and it is unique during the current year, which you haven't seen in the previous years, and it is not as per the general business course of the company. Then in that case, you may want to ask for a positive confirmation from that third party. And negative confirmation is generally considered to be useful when auditor is asking for an evidence over the overstatement of the balances. So in, for example, when you're obtaining confirmation for trade receivable balance and your risk is whether the trade receivable balance is overstated or not, then you may ask for a negative confirmation, and you may draft a confirmation in a way that if you do not agree with this balance, then your response would be needed. So definitely in that case, negative confirmation request would be more useful. Now, since we understand what are the different types of confirmation requests we have, the next thing is what will you do if management says that please do not send this confirmation request? So the first step which we should take is we should understand from management as to what is the reason why they are refusing us to send the confirmation request. Because generally, when management refuses for something to the auditor, then it is considered to be a limitation on scope, and it would be a limitation on the audit evidence as well. So you would want to understand what is the reason why management is refusing us to send the confirmation request. And in practical world, the most common reason which we generally get from management is there is some legal dispute which is going on. There is some negotiation or reconciliation which is happening. For example, there is a trade payable balance where there is a payable amount in the books of the company, and it is significant enough where you would want to take a confirmation response from the third party to confirm the existence of that payable balance. And there is some litigation which is going on with that party. For example, that party that is a contractor which hasn't performed as per the contract, and there is some liquidated damages which company has levied on that party. So there is a negotiation which is going on where parties trying to negotiate to remove that liquidated damages. However, company is refusing that. So there is some negotiation which is going on. So in this case, company would want you to not to send a confirmation request. Now, in this case, you should obtain evidence from the management to corroborate the fact that there is a dispute or a negotiation which is going on. So it can be in the form of email communication. It can be in the form of certain physical documents, communications or correspondences between the company and the third party. So any kind of evidence which is reliable and which confirms the validity and reasonableness of the reasons an auditor should obtain. Now, what happens in case you're not able to obtain the evidence, or management is not able to provide you the reason as to why they are refusing us to send the confirmation request? So in this case, there can be so in this case, what auditor should do is he should assess his risk of material misstatement under SA 315. So he should assess whether it involves risk of material misstatement. So how wrong the balance can go in case if there is a misstatement. If he feels that it is a material misstatement, then he should further evaluate whether it indicates a risk of fraud, and such evaluation should happen under SA 240. So after his risk assessment, if he feels that he needs to perform some more substantive procedures or audit procedures, then he may decide. For example, in my case, for confirmation of the payable balance, then he may ask for all invoices which are forming the closing balance, and he may want to verify all those invoices and the related evidences to confirm the existence of that payable balance. Or second thing, what he can do, if even after performing the other alternative procedure, he is not able to obtain a sufficient and appropriate audit evidence, then he may want to modify his audit report, and he may want to evaluate the impact of this fact on his auditor. Now, taking other scenario where management has asked us not to send the confirmation request, and they have shared the relevant evidences, they have shared the email communication or other related evidences with us, which shows that that management request is reasonable. Then in that case, we may again decide what alternative procedure we can perform. So in my example only, so instead of verifying all the invoices against closing balance, we may want to decide that above this particular materiality threshold, we may want to test few of the samples to confirm the existence of that payable balance. Now, after all of this, we should communicate with those charged with governance about our observations, about the procedures which we perform to address those observations, and what is our ultimate conclusion out of it. So this is all we should perform when management refuses us to send the confirmation request. Now, next thing which we should understand is what are the procedures we should perform when we are sending the external confirmation request. So I would categorize them into three categories. First, you should identify what is the information you want to confirm. Second, you should identify the appropriate party to whom you should send the confirmation request. Third, you should take care of certain activities throughout the process of confirmation request. So first, determining the information to be confirmed or requested. For example, if you are asking a bank to confirm the balance, so you should identify the information. So in terms of information, it can be which bank account balance you want to confirm with the bank. So that you can list, or in case there are certain other accounts which you feel that it would be with the bank, like guarantees or LCs, etc. So you may want to include that in your confirmation request. So first, you should identify the information which needs to be confirmed by a third party. Second step, selecting the appropriate confirming party. So it is very important that confirmation is sent to the appropriate party. Even when you are asking for a bank confirmation, then you should identify who is the relationship manager for that entity. So if you are not able to identify the relevant party to whom the confirmation needs to be sent, then you would not be able to get response, or even if the response you are getting, you will not be able to get the reliable response. So it is very important that you identify the appropriate party to whom you should send the confirmation and from whom the confirmation is expected. Now, in terms of other activities which you should perform and you should take care of while designing the confirmation request is provide a specific format to client for confirmation. So as I mentioned in my previous slide, positive confirmation is something which is more prevalent in practical world. So you may want to send a positive confirmation format to the management, asking for certain informations to fill in and authorize them, authorize that letter and send it back to you as an authorization letter, which you can send it to the third party to ask for a confirmation. Second, obtain signed confirmation request on a client letterhead. So it is very important that the confirmation request should be on client letterhead and it should be signed by appropriate signatory, because this is something which gives you right in front of third party that you're making a valid request to the third party to confirm that information and you have been authorized by the management to obtain that confirmation. Third, affix a unique code on each confirmation. So for example, in I've seen certain organizations which have like 700 to 1,000 bank accounts, and that makes it very difficult to track the confirmation request. So you may want to put a unique code or unique number on each confirmation for you to track the confirmation responses. Then agree the individual's address to the recipient's letterhead, business card, company website, or trade directory. So if you are going to send a confirmation request to an individual, so you may want to validate. If you are sending it to a physical copy, then you may want to validate the address. If you're sending it via email, then you may want to validate the email address, whether you're sending it to the correct email address or not. And within email, you may want to validate the domain, whether, for example, if you're sending to HDFC Bank, then you may want to validate whether the email ID contains a domain with hdfc.com or something similar to that. Then next is scan paper confirmation for our records. So for our records, if you have sent a confirmation request through hard copy, then you may want to scan that confirmation paper for your records to say that this is the confirmation which I requested from the third party. Then you should courier it from your firm's address, or it should be couriered from the auditor's office address, not from the management. Then you would want to keep a courier receipt to track the delivery of that confirmation request. Then once you have received the confirmation, then you may want to agree with the unique code to validate its authenticity. Then the last step is you may want to document the received confirmation in the file and may want to keep a soft copy as well for your ready reference in your records. So these are all procedures which needs to be performed while you're drafting, sending confirmation, receiving the confirmation as a part of your audit procedures. Now, the next topic is you have sent the confirmation. You have, for example, selected the positive confirmation request and sent it for the bank to provide a response, and you have received the response. Now, what you should do to evaluate the response? There are 4 scenarios. 1, a response by appropriate confirming party indicating agreement with the information provided, or you have been shared the response for the requested information without exception. So this is something what we would expect as an auditor, and management would also expect that there would be a appropriate response, a positive response from third party, and whatever the information which we have requested, we would receive. Second is a response deemed unreliable. So there may be a situation when response is considered to be unreliable. We'll discuss it in the subsequent slide. There may be a situation that there is no response, then what you should do. And there may be a response which indicates an exception. For example, you have requested for a bank confirmation and there is a difference between the balance in the books of the company and the balance which is confirmed by the bank. So we'll also discuss what we should do. So first, to assess the reliability of the response, what we should do. So as we all know, every response carries some risk of interception, alteration, or fraud, regardless of whether it is obtained electronically or by any other medium. And there are 2 things which causes a doubt about the reliability. If that confirmation response is received by the auditor indirectly. So, for example, you have sent a courier to bank and bank has responded to management's address, and then management personnel is sharing that hard copy response with you. So in this entire process, you have lost the control of that confirmation request when bank responded to the management, and there are chances that management may manipulate that confirmation response. And second reason can be, it may appear that it hasn't come originally from the intended confirming party. So for example, when you're receiving the confirmation response, it is received in a envelope, which is, for example, you're getting a SDFC bank confirmation, and it is received in a blank envelope, plain white envelope, and it is not on the letterhead of SDFC bank. So it may appear to you that such a big bank cannot provide a confirmation in this fashion. So it may cause a doubt about the reliability of that confirmation. So there is one example which I have listed. For example, if a confirming party uses a third party to coordinate and provide a response to confirmation. So this is another emerging topic which is there in our audit environment. So these days, banks are using third parties to provide a confirmation on their behalf. So how the process works, you obtain an authorization letter, then you upload that authorization letter on third party portal, for example, confirmation.com, and that third party coordinates with bank, and then bank shares response to third party, and then third party then provides a response to us. So in this process, it causes a doubt about the reliability of the confirmation because there is one third party which is involved in this entire process. So we do not have any control over their system. We do not understand what are the risks which may involve in this entire process. We do not know whether bank has influence over third party or our client has influence over that third party. So because of all these things, it raises a doubt about reliability of the confirmation request. So what we should do, if we identify factors that raise doubt about the reliability of response received, we obtain further audit evidence to address these doubts. For example, if we have received a confirmation response, for example, we sent a confirmation request by email, and response is received from a different email, and it was a Gmail ID or a Yahoo ID or something similar to that, then in that case, what additional procedure we can perform is we can make a telephone call to that third party and make a verbal, take a verbal response, and can understand whether they are the same party, the intended party to whom we sent the confirmation request, and can understand the reason why they didn't respond using their email, original email. So we can think of other alternative procedures as well, but this is something which we do in the practical world. Now, if we determine that response to the confirmation is not reliable, we evaluate the implications on our risk assessment procedures, nature, time, and extent of the procedures. So as I said in my previous slides, if we feel that the response is not reliable, then we may want to perform alternate procedures, for example, verification of all invoices against the closing balance or similar other procedures. What are the alternative procedures? As I mentioned in my previous slide, if we are not getting response to the confirmation request or the confirmation response is not reliable, for example, for trade receivable, we may vouch for the subsequent cash receipts, as well as we may vouch for the closing balance invoices along with the customer confirmation if applicable. Similar to payables, we can vouch for the subsequent cash disbursements, or we can vouch for the invoices against closing balance along with the goods receipt notes. So we may think of the alternate procedures based on this practical scenario. And again, if we are not able to get sufficient evidences from there as well, then we'll have to think of modification to the audit report and reporting the fact to those charged with governance as a part of our closing presentation to them. Now, the next topic is on mode of the confirmation. So what are the different modes of confirmation we do have? So there can be confirmation by post, confirmation by hand, and electronic confirmation. So let's discuss first confirmation by post. So for example, there is a confirmation request which you need to send to a international party, then or to a domestic party, then you can definitely do a courier or a registered post, which you can use as a medium of confirmation. For example, in your previous audit, you have faced a delay in obtaining the confirmation request, and you feel it is more appropriate and it would be more quick to obtain a confirmation by hand. For example, in case of bank confirmations, then you may coordinate with the management and schedule a visit to the bank. There you can obtain a confirmation by hand. And the third medium is mostly used in today's audit world, which is the electronic confirmation, where you perform different checks, and after that you send electronic confirmation, and then you obtain a response and you document your audit evidence. So we are familiar with the confirmation by post. Now, if we talk about confirmation by hand, so what are the unique things and important things which you should take care of? One, you should obtain a signed confirmation authorization letter from management on their letterhead. Then you may want to put some unique code on that confirmation request. Then you would want to visit a bank and get it signed from the concerned official of the bank. And for that, one of the official from management can accompany you. Then when you are obtaining the confirmation response from bank's official, then you would want to obtain their visiting card as a part of evidence to confirm their authenticity and identification of bank official. And you may want to ask the bank official to write a remark on that confirmation response to say, this confirmation response has been provided by such and such individual on such date at such time to Mr. X from this audit firm. So that kind of a remark makes it more clear that when this confirmation was obtained, from whom it was obtained. So it is more reliable evidence. If we talk about the electronic confirmation, which I said it is something which is more common in today's world. So first, I'll talk about the procedures, what we should do, and then we can talk about the risk. So in terms of procedures, as a part of electronic confirmation, you obtain a confirmation authorization letter from management, which is signed on their letterhead. Then you scan it, put a unique code, and then after that, you obtain the relevant email address on which you would want to send this confirmation request. Now, the important step here is you would want to validate whether that email address is appropriate or not. For that, you would want to check the domain of that email address. How could you check the domain? For example, for bank confirmation, you have been shared an email ID of Mr. P @sdfc.com. So you would want to validate that domain from the SDFC bank side to say that all the email IDs pertaining to SDFC bank have same domain. So you may want to validate it from there. Or you may want to validate it with some other communication from bank. So management must have some communication from bank to say that this is the person you would want to contact in case of any support needed from bank. So it is very important that you validate the email address before sending the confirmation request. Once you have validated, then you draft an email to bank attaching that confirmation request. And once you have sent it, then if you haven't received it for a reasonable period of time, then you would want to follow up for that confirmation, maybe once or twice. And even after that, if you are not getting the response, then you may want to align with the management to help you to get the response from bank. Now, what is the risk involved in this entire process? So first risk is response from not an appropriate source. So as I said, it is very important for us to validate the email ID or the person to whom we are sending the confirmation request. So if we are validating the email ID from this website of bank or from any other source which is available with management, then that way we may address this risk. Second, person is not authorized to respond. In this case, you may want to understand or you may want to obtain an evidence from management to say that, yes, this person is authorized. So then, as I said, there may be some communication from bank that this is the authorized person to respond on the behalf of bank. And this is the authorized person or authorized representative to deal with all the requests related to that particular entity. So from such kind of evidence, we can validate that, yes, that person is authorized to respond. Then the third is integrity of transmission. So when you're sending this confirmation request from your official email ID, then that way you're addressing the risk of integrity of transmission. However, if bank or any other party is using a third party to provide the confirmation response, for example, I discussed in my previous slides, these days banks are using confirmation.com to provide the confirmation response on their behalf. Then if that third party is involved and we are using that medium of obtaining the confirmation, then in that case, we are compromising the integrity of transmission, because we sent a request and we are getting the response from that third party, not directly from bank. So this way, we are risking the integrity of transmission and it won't be a reliable confirmation response. So this was on electronic confirmation. This is what I told, what I spoke about validation of email. You may want to call the recipient to agree the email address or agree the individual's email address to recipient's letterhead, business card, company website, or agree the domain of the email address to entity's domain. For example, if you're sending confirmation to tatamotors.com, then you may want to verify it from their letterhead or business card or from their website that it is the domain which is generally used for all email IDs, for all employees' email IDs working in Tata Motors. Then one more important thing which you should take care is you should not copy the entity's personnel or the management's personnel if you are intending to obtain a direct confirmation response, because it may lead to it may be deemed that it is an indirect confirmation, and the third party may respond to management instead of directly responding to you. So it is important that you do not copy them in the email communication. So if confirmation responses are written directly to the entity rather than to us, we generally send another confirmation request and request that the response is mailed directly to us. So for example, you have sent an email to the bank for asking for a confirmation and bank has responded to the management. So in your previous email request, you may want to put a top-up email or a top-up request to say that thanks for your response to the management. However, as a part of our audit procedure, we need the direct response from bank. So would request you to share another response directly to us, not marking any of the personnel within the management. So that would be the another procedure you can perform. Now, since we have talked about different types of confirmation, different ways to perform confirmation, then what are the risks we can address, or what are the alternative procedures we can perform. Now let's talk about what are the documentation requirements which are required by standard, or these are the practices which we follow in our practical world. So first thing to document is what are the procedures you have performed. So as I was mentioning, that different steps which you should take care of when you're drafting the confirmation, sending the confirmation and obtaining the response. So this entire process, step by step, you can document and you can record it as a part of audit evidence in your work papers. So this is something which should be done. Second, important documentation is if management has refused you to send the confirmation request, then what is the audit response to that refusal? If the refusal was not appropriate, then what are the steps we have additionally taken as a part of our audit procedures, whether we have modified our audit report, what we have communicated to those charged with governance. So all those things you can document in your work papers. If the refusal is appropriate, again, what are the alternative procedures you have performed to confirm the existence, about information, balance, etc. So that is something which you should document. Third is the basis of sample of items selected for confirmation. So, for example, in case of banks, we generally take confirmation response for all bank accounts. This is the practice which we follow. However, in case of trade receivables, trade payables, we may want to sample it because there can be a number of parties and we cannot, considering the limited time available during the audit, since we perform the audit, and we perform the sample checks during the audit, it would be inappropriate to obtain the confirmation for all balances. So we may want to sample it. So what is the basis? For example, we have taken any statistical approach, we have used any tool to select the samples, or we have used the haphazard approach where we randomly selected the samples, or we have selected top items for confirmation. So whatever the approach we have used for sample selection, that should be documented in our work papers. Then fourth is, if you're obtaining the confirmation through electronic mode, then you may want to document the authenticity of electronic confirmations. For example, what procedures you did perform to verify the domain of that electronic email address, whether you did call to concerned person to confirm the correctness of that email address, or you verified from other correspondences from that party to management, or you did verify from the third party's website. So what all procedures you have performed to confirm the authenticity of electronic confirmation, that is something which you should do. And last important thing which should be documented, if you haven't received the confirmation response, then whether you have done the follow-ups, so how many times you have done the follow-ups, or if there are differences which are received, which are there in the received confirmations, like between the book balance of the company and the balance which is confirmed by a third party, then in that case, you would want to record the reasons for those differences which have been explained by management, whether they are reasonable or not. If they are not reasonable, again, you would want to document what further procedures you have performed. So now I'll pause here. So this was what I had to talk about. There are many other examples which I can talk on the confirmation, but I would like to pause here, and maybe I would want to pass on the mic to my colleague.
Hello. Thank you so much, CA Mukul Bindalji, for the informative session that you have provided. It's been a great deliberation from your side on SA 505 external confirmations. I hope like many people are having so much question answers with them. So they would really like to ask you questions. We are getting them, but we would request you to stay till end. So have the question answer round in the end of the session. And now I would like to request CA Apoor ji to welcome our speaker, CA.
Good evening, everyone. And I would just like to say once again that it was a good and informative session which Mukul Bindalji just gave us. Now I would like to introduce once again CA Shubham Bindalji. So he has more than 8 years of experience in across the big four companies. He has been the associate director with the accounting advisory practices of the, so what do you call it? Period services, Perian services, right? Okay. And he has an experience in public accounting assurance services of listed and non-listed clients both. And he has also been part of external and technical audit teams. He has worked closely with technical accounting professionals in EY. And he has worked extensively on external audit clients in the fields of oil and gas sector, renewable energy, power distribution, pharmaceutical domain. And I would like to point out that during his professional career, he has been recognized for his excellence in the service delivery in form of multiple awards, such as Exceptional Client Service, Spot Award, Best Trainer Award, and Move the Dot. So I would just like to invite Shubham Bindal sir, to give us some more information regarding SA 560, and which is a very important essay in our field, which is based on subsequent events. So there are multiple stages on which there might be changes regarding the financials, audit reports, and based on that, I think Shubham Bindalji would be the better person to deal with it. Please, sir. Please.
Thank you so much, Mukulji, for the introduction, and thank you to the entire fraternity for having me here. So today we are going to talk about subsequent events. The session is planned in two phases. We will start with the accounting concepts in subsequent events. We will talk about IS 10, which deals with the subsequent events, how it should be dealt with the financial statements. And later on, we'll also talk about the auditing concepts, which are given in SA 560. What would be an auditor's responsibility in different circumstances? What procedures are to be performed by an auditor? What are auditors' responsibilities, even when the financial statements have been issued, and if there are any information that comes to their knowledge, which requires attention. So let's begin with the accounting concepts. So in accounting, there are two accounting standards in an Indian scenario which talk about events after the reporting date. The one is Ind AS 10, and then its counterpart in IGAAP is AS 4. More or less, both the standards are similar in nature. There are slight differences which we'll also talk about. Now, in Ind AS 10, essentially, let's talk about subsequent events. So essentially, what is a subsequent event? What happens is, an organization, when they're preparing the financial statement, till the date, till the year end, they consider all the transactions that have happened during the year. But there will always be a lot of transactions or a lot of events that happen after the year end. Let's take an example. If a company is falling 31st March 2023 as an year end, then till the time the financial statements are issued, there would be a time gap and there would be a lot of transactions that happen during this time. Those transactions could impact the financial statements or may not impact the financial statements for the year ended 31st March 2023. The standard talks about how to deal with these kind of subsequent events. So the standard says that there are two types of events. One has to be adjusted, one not adjusted. We'll talk about it. What an organization needs to understand is what is the grievance of the event that has happened, whether it is material in nature or not, how it impacts their financial statements, and accordingly deal with it. So the scope of the standard is, the standard talks about how to account for it, account for the events that happen after the reporting period, and what are the disclosures which are required. Essentially, the objective is to provide guidance with respect to how to adjust the events in their financial statements and what all disclosures are to be given. It is very important to know. So let's talk about the reporting period first. So what happens is, as an example I was giving, 31st March 2023. Let's take an example of an oil and gas company. Now, suppose the company is having a year end of 31st March 2023, and it is, let's take an example, a listing company. So the 31st March 2023 will be the end of the reporting period. There is a possibility that an auditor issues the audit report. Let's take an example, signs the audit report on 1st of September, and the annual general meeting happens on 30th of September. And let's take an example, the board meeting also happens on 1st of September itself. So there are a lot of events that are happening. 31st March is the year end, which is the reporting period. then approval of the financial statement will be the date on which the board approved it. So a lot of time, there could be a confusion that, whether the date of approval should be considered the AGM report or not, AGM date or what else. So the date of approval of financial statement is the date on which board approves it. There are two types of adjusting events. There are two types of events that the standard talks about: adjusting event and non-adjusting event. Now, adjusting event are those for which conditions were already present as on the reporting date. For example, there was a litigation going on, and the company, let's take an example, the company had considered that, we might win the litigation, and hence they considered it as a contingent liability. They did not consider it as a provision. And let's take an example, or maybe on 30th of April, they lost the case. In that case, essentially the conditions were already present as on the date of reporting, and hence it should be considered as an adjusting event. There could be a non-adjusting event as well. The classic example could be issuance of dividend or proposal of dividend. Generally, of course, that would happen post year-end. So the standard talks about any adjusting event has to be considered in the financial statements, has to be in effect has to be taken in the financial statement itself. So in the first case that I was talking about, if the entity has lost a case for which a contingent liability was earlier presented, ideally the management should consider the effect of this losing of the case, and then they should kind of adjust it in their financial statement and consider provision. And a non-adjusting event could be, let's take an example, company has entered into buying into another entity, and there were no conditions which were already present before the year end. In that case, the standard says that ideally the organization should provide a disclosure about this event in the financial statement. Now, we can also talk about a few more cases of adjusting event and non-adjusting event. So the adjusting event could be, as I mentioned, a court case already going on, and the organization lost that case, and since conditions were already present, it would become a adjusting event, and the organization would have to consider a provision in their books. Another example could be, let's take an example of oil and gas only. So another example could be, there are a lot of estimates that are considered in oil and gas industry, maybe an asset restoration obligation. So let's take an example. The organization had already considered a provision in their books, and there are certain adjustments that had happened post year end, or there are certain events that have happened post year end, which provide more clarity about the estimates that the organization had considered. In that case, there is a possibility that it can be considered as an adjusting event, and the organization may have to kind of update their estimates. A few more examples could be, let's take an example, the organization had considered the organization had a profit sharing arrangement and had considered a provision. Post year end, so since it was an estimate post year end, let's take an example, those estimates were, kind of came to a conclusion, and let's take an example, the provision was for 100,000 rupees, and later on it was considered that, the provision should have been 200,000. Since the conditions were already present before the year end, ideally the management should update their provision because of the clarity that has been that they have got post year end. A major reason for this, this accounting standard would also be frauds and errors. So let's take an example. The organization had considered a wrong provision in their books by error, or there was a fraud that happened, and post year end, it came into the news. Let's take an example that, there were some fishy things going on, and, it got clear that there was a fraud going on. In that case also, the organization organization should consider the effect in their financial statement because the conditions were already present at the reporting period. A few examples of non-adjusting event could be, let's take, as I mentioned, an organization has got into a business combination transaction. They have, purchased another entity. They have announced to discontinue an operation. They have planned to kind of sell their part of the business or one of the segments in their business they want to sell, or they have planned to, kind of consider it as held for sale. In that case also, it will be considered as a non-adjusting event. It is very important for an auditor to, understand whether conditions were already present or not. Again, let's take an example. The conditions were already present in case of held for sale before the year end. It was come to the notice of auditor post year end that the organization was planning to sell something. In that case, it will be considered as an adjusting event. So it is a little subjective in nature. The auditor should go to the depth of the case and understand whether it should be considered as an adjusting event or a non-adjusting event. A few more examples could be a major restructuring happening, destruction of a major, production plant by fire, any contingency that has happened. Those could be the reasons. Those could be the events that can be considered as a non-adjusting event. Now, one question might arise that why, if it is a non-adjusting event, why do we even have to give a disclosure? The primary reason is all these transactions can impact a business. And it is important for the stakeholders to understand or to know that these are the major events that have happened for the business before the issuance of audit report. Now, as I mentioned, it could be very material for the business. Let's take an example. It affects the going concern of the business. In that case, the standard is very clear that if there is an event that has happened, be it adjusting event or a non-adjusting event, it will impact the financial statements, and the management will have to redraft their financial statement on a non-going concern basis. So it is not necessary that whether the conditions were present before the year end or not. Let's take an example for this. There is an organization has, let's take an example, a big plant, manufacturing hub, and there was a fire that took place that destroyed the plant. In that case, it's very clear that there is going concern issue here. Even though the conditions were not present on the date of reporting period, the management will have to redraft their financial statements on an ongoing concern basis. There are certain aspects with respect to subsequent events. One of those I talked about dividends. So Ind AS 1 also talks about dividend, and why. So Ind AS 1 talks about that any dividend declared post reporting date has to be disclosed in the financial statement. It's as part of note, and it is not required to be recognized as a liability because it is a non-adjusting event. Since the condition, although there could be a confusion for a few people that conditions were already present, the organization was already earning money, and everybody knew that dividend will be declared. However, it is not considered as a non-adjusting event. It is not considered as an adjusting event, and hence there is only a note that is given. Going concern, we also talked about. Ind AS 1 also, kind of talks about if there are any reasons to believe that going concern is not there, then financial statements are not should not be prepared on a going concern basis. It is important in the financial statements. It is important that the financial statement should also talk about, should specify the date of approval of the financial statement so that a person is able to understand till what period the events have been considered. In case there is a non-adjusting event that has happened, it is the responsibility of management to disclose the nature of the event, the estimate of the financial effect. A lot of time it might happen that the management says that, we are not sure what would be the financial effect. Then an estimate has to be made. If an estimate is not being made, in that case, the fact that management is not able to estimate has to be given in the financial statements. Now let's talk about the auditing considerations for subsequent events. So the auditing considerations are driven by SA 560. SA 560 talks about subsequent events, saying that these are events occurring between the date of the financial statement and the date of the auditor's report. It also talks about the facts that are known by the auditor post issuance of the audit report, but before kind of issuing the financial statements. Now, what is issuing the financial statement? So it will depend on the regulatory environment of the entity. For example, if it is a listed entity, in that case, the date on which the financial statements are submitted to the stock exchange will be considered the date of the financial statement or issuance of the financial statement. So let's take an example. There is an organization which is a listed organization, has year end as 31st March 2023, and the audit report is issued. Let's take an example on say 1st of August. It is and then it is filed. Wrong example. So essentially, let's take an example. 31st March is the year end, and the audit report is signed on, let's take an example, 20th of April, and then it is and it is filed on 25th of April to the stock exchange. In that case, the period between the 31st March till the 20th April, till the date which is signed, all of that have to be considered by the auditor, and a lot of procedures have to be performed, which we will talk about later. And for the period between 20th to 25th, there are no major obligations on the auditor. However, there are still certain obligations that certain procedures that have to be performed. In case there is a non-listed entity, the financial statements or the date on which the financial statements are provided to the third party will be considered the date for issuance of financial statement. And in all other cases, the notice on which the notice for AGM, the date on which the notice for AGM is issued will be considered as the date of issuance of financial statement. Now, what are the objectives of an auditor from SA 560 standpoint? So the auditor has to obtain sufficient appropriate audit evidence for the events that have happened from the end of the financial year, which is 31st March 2023, till the date the audit report is signed. So there are certain procedures, we will talk about it, but the standard requires auditor to obtain sufficient appropriate audit evidence for this period. And the standard requires auditor to respond to the facts that are come to their knowledge post issuance of the audit report. So there could be certain events that might have happened post issuance of audit report. The auditor has the standard has certain expectations from the auditor to kind of perform those steps and respond regarding that information that they've got. There are three major periods which the standard talks about. So the first is events occurring between the date of the financial statement and the date of the audit report. The period when we discussed that the auditor has to obtain sufficient and appropriate audit evidence. Then there is a period after the issuance of audit report till the date the financial statements are issued. In our previous example, the date from 20th of April till 25th of April. So any facts that the auditor comes to know we will talk about it. There are certain expectations of the standard that have to be fulfilled. And then any facts which become known to the auditor after the financial statements have been issued. So let's take an example. let's take an example. The financial statements have been submitted to the stock exchange, and till the time of AGM, let's take an example. Something might happen. This period talks about those scenarios. Now, events that occur between the date of financial statement and the date of the audit report. The auditor has to obtain sufficient and appropriate audit evidence for the events that have happened during this period. So how auditor can achieve this? So auditor will obtain understanding of the procedures established by the management for identification of subsequent event. Ideally, since the auditor is also commenting on the ICFR, auditor would have to go through the entire process the management has established to identify subsequent events. These procedures could be taking confirmation from a legal counsel. It could be monitoring the news articles. It could be circulating the information from different departments to the finance department, so that finance department can understand the events that are happening post year end and can kind of consider those as part of their financial statements. So these could be a few procedures few processes that the management might have established, and the auditor should obtain an understanding of these procedures, and they would essentially, as part of their ICFR, would also test the controls around it. The auditor should also perform inquiry with the management, or where appropriate, those charged with governance of any subsequent events that have happened. The kind of questions an auditor might ask is, are there any major transactions or major business combinations that have happened post year end? Are there any major deals that the management has entered into? Is there any major change in the strategy of the management? Because those could also be some indicators which could suggest that there could be a subsequent event that might have happened. The auditor can also read the minutes of the meeting, of the board meeting. They can try and understand what kind of activities that are going on. One of the examples could be if the management has suddenly sold a lot of machinery, they have decided to kind of upgrade their technology. Those could be an indication that the technology was already obsolete by the year end, and those could also those indications could require an adjustment in the financial statements. Similarly, the auditor can also go through they can also perform an inquiry with the legal counsel. There would generally be a tracker that is maintained by the legal counsel, which would have all the legal cases that are being kind of filed against the company. So those legal cases they can also go through. Auditor should not restrict themselves to the legal cases that were filed till the reporting date. The auditor should also consider the cases that have been filed post reporting date, because a lot of time it happens an auditor might get biased to the fact that I only need to look at the cases that were filed till the year end, and I will look at the developments that have happened. And the management might also argue this, that why do you need to see what all new cases have been entered? However, there could be scenarios, say for example, there is a major claim from one of the employees that the salaries were not paid to the employee, or the bonus provided was not appropriate. Those kind of things might be captured through those new cases that have been entered, and the auditor might have to see whether what should be the impact on the financial statement, whether it is an adjusting event or a non-adjusting event. So those cases should also be looked into. And at the same time, those cases which were filed before 31st March, the auditor should keep looking at the progress that is happening. I remember on one of our clients, there was a major case that was filed against the company just before the signing of the audit report. And we had to request the management to, kind of prepare their PPR analysis and provide us, their assessment, whether they would consider it as a provision or what not. And a lot of things happened. So till the date the audit report is getting signed, it is important for the auditor to keep looking at the, the cases that is being filed against the company. Another procedures that the auditor might perform is looking at their the management's interim financial statements. For example, an organization might have prepared, an interim financial statement or a quarterly financial statement, which might not get published to the public, but for providing it to certain party. Let's take an example. Even if it is not audited, the auditor may request the management to provide those financial statements to the auditor, and the auditor can look at what are the major variances. They can perform a variance analysis and see what could be the reason for such variances, and understand if any of those subsequent adjustments that the management has considered in the interim financial or quarterly financial, whether that should take place or in the financial statements that the auditor is signing. The auditor can also look at the latest available budgets, cash flow forecast, and other management reports, because they can also provide a lot of insights in terms of what is happening in the organization. Are there any, any events that require their attention, which might also require adjustment for the year end. One of the examples could be, let's take an example of startup companies. Suppose the management has kind of cut down their revenue projections significantly in the cash flow forecast that they've prepared for a later date. That gives an indication that there's a possibility of impairment of assets appearing in the financial statement as at reporting date. So those kind of things the auditor should look at. This can give a lot of insights to the auditor while signing the audit report. And apart from all of this, the auditor should also take return representation from the management that they have kind of disclosed all the subsequent events, and the auditor can keep it as part of their audit evidence. Now let's talk about the facts that the auditor comes to know post the date of audit report. Now, the standard says that there is no particular obligation on the auditor to kind of do any audit procedure, so to say, regarding regarding the financial statement once they've been signed. However, the standard says if the auditor gets to know, becomes aware about any event that leads the auditor to think that the audit report that they'd signed, their opinion would have been different if they already knew it before signing the audit report. Let's take an example. The impairment piece I was talking about. So let's take an example. There is certain news going on that there is a particular technology that is getting obsolete. So if the auditor comes to know that the business is dependent on this technology and it is getting obsolete, and the auditor has already signed the audit report, the auditor might have to think whether, if the auditor knew this information before signing the audit report, would that impact their audit opinion on the financial statement. If that is the case, the auditor will have to is recommended to discuss, or is required to discuss the matter with the management where appropriate. They can also go to TCWG. TCWG. They will have to assess whether the financial statement needs an amendment. So in this case, even there is a possibility that the organization might have to consider preparing the financial statements on an ongoing concern basis, and inquire the management whether it intends to address the matters in the financial statements or not. Now, there could be two scenarios. The management might agree that, we agree to the fact that these kind of events are impacting our financial statements, and we will prepare another another set of financial statements. In that case, the auditor will have to perform audit procedures necessary for that particular account. Let's take an example. The auditor, the management considers an impact on the receivables. There was a major receivable which got bankrupt. So essentially, the management says that we will not be able to recover the entire amount which we are showing as receivable. In that case, the auditor will have to look at the updated schedule provided by the management, whether the provision is appropriate or not, whether the amount of provision that the management has considered is appropriate or not, considering the circumstances. Similarly, other example could be that management is considering impairment. So though management has agreed that they will consider impairment, there's a possibility that management considers impairment for 10%, and the auditor looks at the calculations and the assumptions, and auditor might have a different view. So the auditor will have to perform necessary procedures to validate whether the management has considered the effect of those events appropriately in their financial statements. The auditor will also have to obtain a written representation regarding the changes that have been brought, and are there any other changes that management believes should have been considered in the financial statements. And the auditor will provide a new auditor's report on the amended financial statements. It is important to note that the new auditor's report should not be dated earlier than the date of approval of the amended financial statements. So the auditor cannot sign the audit report or date the audit report same as the previous audit report. So the audit report's date will change. Now the other scenario wherein the management might not amend the financial statement, the auditor will have to consider. There could be two scenarios. One, that the audit report has not yet been issued to the entity. In that case, the auditor will modify their opinion. The auditor will, of course, have to see whether the impact is pervasive in nature or not, whether they would have to qualify the audit report or give an adverse opinion. So all those considerations will have to be considered from SA 705's perspective, and then provide the audit report. The other scenario could be that the auditor's report was already issued to the entity. In that case, the standard requires the auditor to notify the management and TCWG not to issue the financial statements to the public. Now, again, there could be two scenarios. One, wherein the management stops the financial statements to be issued, and then again agrees to take the effect of the changes. And the other scenario could be that the management goes ahead and nevertheless subsequently issues the financial statement without any amendments. In that case, the auditor is required to notify the client, and the auditor's report should no longer be associated with the financial statement. So essentially, they would kind of write a letter to the third party that to which the management is submitting the financial statement, or in case it is, let's take an example, they're going to submit the financial statement to a bank. In that case, the auditor is expected to write a letter to the bank that my audit report is no longer associated with the financial statements. The auditor will notify the regulatory agencies, for example, NCA, that this is the scenario that has happened. There are so and so adjustments which are required, and my audit report is no longer to be relied upon. And the auditor will notify each person known to the auditor who will be relying on the financial statements. Now, it will be a big challenge, a big responsibility on the auditor to kind of notify each person who will be relying on the financial statement. In that case, the auditor can give a press release that I had signed this financial statement and my audit report is no longer associated with this. The auditor might also take a legal advice that what actions can be taken against the management, and they will have to revoke the UDIN. Now, there could be some scenarios, some events that are known to the auditor once the financial statements have been issued, again, the standard says there is no obligation on the auditor. However, if the auditor comes to know about an event which the auditor, if the auditor already knew before the year end, the auditor would have considered, the auditor's opinion would have changed. In that case, the auditor is obligated to consult it with the management and those charged with governance, determine what the impact should be, and inquire the management whether they intend to address the matter in their financial statement or not. Again, if the management amends the financial statement, it will be similar. The auditor will carry out the necessary procedures depending on the circumstances. They will review the steps taken by the management to ensure that anyone in receipt of the previously issued financial statements, together with the auditor's report thereon, is informed of the situation. How the management might inform is, so one of the examples could be they can kind of send a letter to each of the shareholder that these financial statements are getting amended. They can also give a press release. They can also reach out to the banks or any third party that to whom they have already submitted the financial statements, and the auditor will have to go through whether management has taken appropriate action to kind of make sure that the people who are relying on the financial statement are aware about these facts. The auditor will extend their audit procedure to issue the new audit report. The auditor can also kind of mention the date of the auditor will have to mention in the audit report as well, maybe through an emphasis of matter paragraph, that this is what happened, and now another audit report is getting issued, and then auditor will give a new audit report. It is important to note again that the date of the audit report cannot be earlier than the amended financial statements are issued. So again, the date of the audit report will change. Now, what will happen if the management does not amend the financial statement? So the auditor shall notify to the client, similar manner that we talked about earlier, that they will take all the steps to make sure that they are able to connect with the client that their audit report is no longer associated with the financial statements. Notify to the regulatory agencies, it could be MCA, that the financial statement should not be, the audit report should not be relied upon. Notify each person known to the auditor that this audit report should not be relied upon. Consider taking a legal advice and revoke the UDIN. In a conclusion, what we discussed so far today is essentially there are while auditing a financial statement, we have to consider all the transactions that have happened during the year till the year end. However, it is also important to consider the transactions that have happened post year end, and they can also have grave consequences on the financial statements. The auditor should perform certain procedures to track that what are the events that have happened post year end, and should consider whether there is an impact on the financial statements or not. If the audit report has been issued, even then if something happens, then also the auditor needs to consider whether if the information was already known to the auditor, would that impact their audit opinion or not. And if it does, the auditor has to take certain steps to make sure that the management amends the financial statements. In case management does not amend the financial statement, the auditor has to reach out to the public at large, to the users of the financial statement, the regulatory authorities, and they can revoke the UDIN. They have to make sure that the users of the financial statements are aware that the audit report should not be relied upon. That's all I had for today. Thank you so much. Any questions?
Thank you so much, sir. Thank you so much, Shubham ji, for such a wonderful deliberation. and you have covered all the aspects relating to the standard. We have received certain questions. So now I am requesting Apurv ji to please start the question answer session and raise the questions you have received, sir, from both the learned speakers. Over to you, Apurv ji, please.
Thank you, sir. And I would just like to thank Shubham Bindal, sir.
Mukul ji is not visible.
this-
Mukul ji, you are there? Mukul ji is not there. Let me check then. I request, sir, Naman ji, you are there? Naman ji? Naman ji, you are there?
Yes, sir, I'm available.
Yes, sir. You may please start the questions from your side, sir, first.
Sure, sir. Sir,
Thank you.
first of all, I would like to thank both our speakers for giving a great deliberation. Now, I would like to ask some questions. First question that we have got is like, how can the auditor be sure that all the subsequent events, especially the adverse ones, have been brought to their notice and considered by the company for adjustments?
Great question. Let's take an example of a listed company. So one of the ways to do this could be analyzing the share price of the company. So a lot of time it happens that in the market there are news which impacts the organization, and that is clearly reflected on the share price of the company. So this could be one of the ways management will be the auditor will be able to capture any event that has happened which could impact before the financial statement. Another example could be the auditor should keep a track of the news in the market. What kind of information news is there in the market? For example, the example I gave about a technology company, whether the technology is getting obsolete. In that case, also there would be an impairment indicator. Other things could be other things again could be it is important to be aware about the client till the time financial statements have been issued.
Okay.
Sir, can I ask one thing on this response?
Namanji, please continue with the rest of the questions.
Yes, sir. The second question we have got is, if audit report is signed on 25th September the following year, so is it mandatory to for the auditors to go through company's performance till the period from April to 25th September?
So you're saying the year ended 31st March and the
Yes.
audit report date is 25th of September.
Yes.
Yes, ideally, the standard requires an auditor to perform procedures to make sure that they have got sufficient and appropriate audit evidence, that there are no subsequent events that requires an adjustment. So all the procedures that I talked about, looking at the budgets of the company, looking at the projections of the company, looking at the litigations that have been filed for the company, all those things will have to be considered by the auditor till the date of 25th of September.
So the auditor shall be quite aware regarding the financials happening in the company after the financial ending as well.
Yes, because that could pose a risk of missing any adjusting event or non-adjusting event for that matter.
Sure, sir. Sir, I would like to move on the next question is whether the adverse subsequent event affecting the going concern issue of the company. However, there is enough bank balance as on existing date, as well as sufficiently covering all foreseeable losses. Does it still require any adjustment or a qualified opinion?
So again, that is quite subjective in nature. So as you mentioned, there is an adverse event that has happened, and the company already has enough cash. So let's take a practical example. The company had 5 production plants, and one of those production plant got fired. So essentially, 20% of the capacity of the organization. Let's take an example that all those had the same capacity. So 20% of the capacity of the organization is impacted. In that case, ideally, the organization should give a disclosure only, and it should ideally not impact the going concern. However, if all 5 of the plants got fired, In that case, the auditor will have to assess whether the cash is enough to kind of rebuild it. And essentially, in most cases, it will not be enough, right? Because the entire business has been destroyed. So in those cases, the organization may have to redraft their financial statement on an ongoing concern basis.
Okay, thank you so much, sir. So just a last question from my side, like other colleagues are also waiting. Just a last question from my side is like up to which event, which subsequent event to be considered after the issue of audit report? Like what is any like a particular date or whatsoever?
Okay. So again, I'll take an example. Suppose there is an organization. There is a company for which the auditor signed the financial statement. Let's take an example on 20th of September. And on 22nd of September, the auditor came to know that there was a fraud that was already happening in the organization. In that case, it is very evident that the fraud does not happen in a day's time. So it would be considered as an adjusting event. And the auditor will have to take the steps we discussed to make sure that the financial statement takes that effect. Similar examples again could be, so fraud is a most prominent example, but the similar examples could be that the management, the management has sold major business. So the auditor might have to again consider whether that would impact. Otherwise, although it is an extreme example, a fraud example would be the most appropriate one.
So thank you so much, Namanji. Now I request Apurvji to please start your questions. Mukulji is already joined, sir. Apurv sir, over to you.
Yes,
if you
sir.
have any questions
Yes,
for
sir.
Mukul sir, please.
Okay. So, Mukulji, I just want to ask you, what if the auditor has no time? The way you explained, from the bank, from the third party, there is a extensive procedure to take the external confirmations. So what if during the time of audit, there is no enough time span remaining with the auditor so as to get a positive confirmation? In case of a negative confirmation, you explained that if the respondent did not reply to that, then you take it as a specified response, be it a yes or be it a no. Am I right, sir?
So my answer to that
And
would
what do we
be,
do in that case, sir?
so am I audible?
Yes, sir. Yes.
So my response in that case would be, it would depend on the basically how the planning for the audit has been done. So there is never a circumstance where you would not have a sufficient time for the positive confirmation. So you would have to plan your confirmation procedures accordingly so that you have sufficient time. And in case you do not have time to wait for the confirmation, then you may go for alternative procedures. For example, verification of invoices, subsequent test. But yes, first preference would be that planning has happened in a way that you have sufficient time for the confirmation procedure.
I agreed with that, sir. So, the point boils down to, I have given a positive confirmation. I've requested for a positive confirmation from the respondent. Now, the response is not being received in time. I've planned it. I have
Okay.
asked the questions in time to the relevant person, the relevant questions, but the response is not being received in time. So, matlab, how do I go about it? Taking an example of yours, balance confirmation from the, let's say, creditor or a debtor, be it anyways. I've asked for that. I have the sale invoices, I have the purchase invoices, but I still, when I'm requiring the confirmation, then there is some gap in the payments or the receipts and the sale and the purchase invoices. That is the reason I require a confirmation. If the confirmation response is not being received in time, then what is the alternative which is suggestible by users?
So just taking your example, that for trade receivable or people, so the alternative procedure can be for a receivable, the subsequent receipts, whether the entire receivable balance has been subsequently collected or not. Second alternative procedure can be verification of all balances. Suppose the closing balance is 100 and against that 100 there are 10 invoices of 10 rupees each, then you can vouch for all those 10 invoices to confirm the existence, along with the for example, it is a trade receivable balance, so you can vouch for the customer acceptance along with those invoices. So again, it would be a practical situation where you'll have to decide your alternate procedures.
Right. Okay. Okay. Now, and again, just continuing with this same question, there's a second part to it. There are many parties whose accounts are nil. The payments and the bills have been adjusted appropriately. Is it necessary, or how far should I be speculative regarding taking the nil accounts confirmation, nil balance confirmations?
So I would say it would depend on the risk assessment of the audit. So for example, if it is a bank balance, so we generally take confirmation for nil balances as well. For example, if it is a related party balance, then we take a confirmation for nil balances as well. Third, for example, if it is a trade receivable, non-trade receivable balance, then it would definitely not be a part of your sample because it is not forming part of your closing receivable list. So it would depend on your risk assessment.
Okay. And so basically, what what you're trying to say is, if in the bank and if there are related party transactions in that, so basically unsecured loan, if we talk about, I don't think there's any related party transactions which would have an outstanding balance at the end of the year, apart from unsecured loans. Is that right, sir?
So again, I would say it depends. If you consider that balance to be risky as from your risk assessment procedures, then definitely you would want to confirm and you want to take a response for that balance. In my practical experience, I have seen related party balances and bank balances, even if they are nil, then we take confirmations for that.
Okay. And so there are listed companies, there are many other companies who are being compliant enough, and they do quarterly reviews, half annually reviews, periodic reviews, basically. Now, based on those periodic reviews, also the balance confirmations are being taken on a periodic basis. But at the end of the year, whoever the internal auditor are, they have been taking those confirmations, they have been taking those reports, ledgers, and they have those records. Now, do I need to take a separate external confirmation from them, or will that will that quarterly reviews confirmation work for me, or I can use the work of internal auditor in this?
So it depends on the professional judgment and it depends on the account balance which you're talking about. So if you talk about the bank balance, definitely you would want to take a direct confirmation. If it is related to, suppose, any trade payables, so although it is not something which is mandatory as per the professional standards to take confirmation, but again, if you feel that there is some risk involved within that balance, then and if you believe as an auditor that indirect confirmation or the confirmation which is with the auditor is sufficient enough for you as a sufficient audit evidence, then you may want to consider it. And if you feel that there is a more risk involved, then you would go for a direct confirmation.
Okay. Just one more thing. I just want a little summary or a gist or your views on this. How does SA 505 interplay with Section 43B? Does it or does it not?
43B of
Income Tax Act, the recently introduced section, sir, that if the payments are not being made to the MSME manufacturers or the service providers within 15 or 45 days of span, then the purchase amount will be added back. It will be disallowed. So if the management provides me, the TCWG, the people who are charged with governance, they provide me with the confirmations from the creditors that they have received the payments, or there is no outstanding dues as on date, as on the closing date, but the account books show a different picture, or there's a management of sort which is prima facie visible. Then what do we do? Which is a practical problem. I think you must be facing this, or you must be thinking about this, how to deal with this.
So from the tax audit perspective, I would say yes, you would want to consider it, and you would want to do some sampling, and you would want to take confirmations for those parties, because and if you feel that based on your past experience with the entity, the amount is going to be material, then definitely you would want to obtain the confirmations for those parties.
That's what I'm saying. It's easy for the management who has a relationship with the opposite party, the creditor. He has a long-lasting relation with the party. That's why they are doing business together. He'll be able to provide me the confirmation much easier than actually making the payments. See, because in the coming next year, from financial year 24-25, these things can be taken care of from the very beginning. But because it's been recently introduced, any person has been given just a span of 3 months, where the trade cycles are of maybe 3 months only, and maybe more also in some machinery companies, some manufacturing companies, some service providing companies, constructions. All there are many sectors where the payment cycle, the trade cycle is way bigger than 45 days or 15 days. So because of having a relationship with the vendor, it's easier for them to provide you with a confirmation. But your account book says otherwise, or they feel that they have been managed.
So again, what I'm saying, based on the risk assessment procedures, if we feel that the account books have been managed, suppose last year the balance for that party was significant, and this year it seems that the balance is not significant and it is nil or otherwise, then definitely you would want to consider it as a part of your confirmation procedures, and you would want to take a confirmation from those third parties with the support from management. So if you were asking what is the relation between these two, so the relation is for verification of 43B, confirmation procedure is one of the key audit procedure which an auditor can perform.
Understood. Okay, sir. Thank you.
Yes.
Thank you, sir. Thank you, Apurv. Now, Ji. Thank you so much, Apurv Ji. Thank you so much, Mukul Ji. Lalit sir, you are having any questions?
Yes, sir. Yeah. I have a couple of
Please.
questions. So first of
Please,
all, thanks Mukul and thanks Shubham for such insightful session. So I got some couple of questions and I'll ask one by one to Mukul. So Mukul, we got one question like, can concept of materiality be taken as a benchmark for obtaining external confirmation from vendors, debtors, and banks?
I would say not for banks, but yes, definitely for receivables like debtors and creditors, because you cannot do the confirmation for all the parties. If there are n number of parties, then you may want to select the samples, and the materiality is the base which you should consider to select your sample.
Okay, thank you, Mukul. Next question is whether subsequent payments are sufficient proof and external confirmation can be avoided both for debtors as well as creditors. So the question is like, can we avoid sending the confirmation if we are able to trace the subsequent payments?
So in this case, again, the first preference should be for confirmations if it is easy to get. But if in your experience it takes time and it is more difficult, then you may go for alternate procedure. And it would depend on your risk as to which assertion you are trying to address. So if you're trying to address then existence, then subsequent payment would be enough. So again, it would be dependent on your risk assessment.
Thanks, Mukul. Moving to the next question. In case of bank confirmation, if the auditor is able to take a direct screenshot from online banking is it required to send the bank confirmation?
So there is no clear answer written in our professional standards. So, in my practical experience, it is advisable to obtain a direct confirmation from bank for all bank balances, considering the high-profile financial failures which have happened in past. So it is advisable to obtain the bank confirmation.
Thank you. The next question is there a need to obtain assurance report from service auditor in case third party is involved in issuing the confirmation request to the auditor?
So I would say there is a guidance which is provided by ICAI, which talks about what procedures you should consider while if third party is involved for obtaining the confirmation. And considering that guidance in practical world, generally it is not a acceptable practice where confirmation.com can be used if you are reporting under Indian auditing standards. So using the confirmation.com for obtaining the confirmation is not something which is acceptable practically when you're reporting under Indian professional standards.
Okay. The last question is, can we always ask the confirming party to say definitely whether they agree or do not agree to the information given in the communication?
Yes, we can ask. So that is what the positive confirmation request is for. So yeah, yes, we can.
Okay. Yeah. So so that's it from my side. Thank you so much for addressing the queries.
Thank you.
Yeah. So now I would like to hand it over to Namanji, sorry, to Anilji for
You're not audible, Namanji. You're on mute, Namanji.
Oh, sorry. I would like to first of all thank all our moderators and our speakers. And now I would like to present my special vote of thanks to Chairman Sir Sanjeev Singhal Sir AASB and Vice Chairman Sir Vishal Doshi ji for giving us the opportunity to gather and have some beautiful insight about the essays. And now I would like to hand over to Mr. Anilal ji.
Thank you so much, Namanji. So, on behalf of AASB of ICAI, I extend my heartiest thanks towards both the learned speaker, Mukul Bindalji and Shubham Bindalji, for sharing their insights about both these standards. They have covered all the aspects relating to both these standards. Mukul Bindalji is, apart from having a busy schedule, he's having this session from UK right now. So apart from having busy schedule, he has given his kind consent. So thank you so much, Mukulji, for this wonderful deliberation. And Shubhamji is also having some personal commitment. That's why since he is having here for this particular session. So from the core of my heart, on behalf of AASB of ICAI, for both these speakers for their precious time and enlighten all of our members about these two standards. Thank you so much, Shubhamji. Thank you so much, Mukulji. I also extend my heartiest thanks towards both all the four moderators of today's webinar, C.A. Ashwini Singhal-ji in his absentia, C.A. Apurv-ji, C.A. Naman-ji, C.A. Lalit-ji, for wonderful coordination and wonderful moderation of today's webinar. You have covered questions relating to both these standards and raised questions with both these speakers. So thank you so much for sparing your time, Apurv-ji, Naman-ji, Lalit-ji, and Ashwini-ji in his absentia. So, and I also thanks all the participants of today's webinar. So thank you so much. Thank you. Namaste. Thank you.
Thank you,
so much,
everyone.
everyone.
Thank you, sir.
Thank you.
Thank you.